If you look back in the four times you've had a larger pullback in Bitcoin, it was about 70 to 90%. This time around is a real recession setting in. A real recession is not going to be kind to Bitcoin. You will have that the stock market is going to decline. If my model is correct, and we're going to see a very massive top, you're going to have a massive decline in Nasdaq, and Nasdaq is outperformed by Bitcoin in terms of upside and downside. So I think you're going to see Bitcoin crashing quite a lot. And you see there's actually, when we have days like the last few weeks here, all of a sudden, I mean, what brought Bitcoin down from 125,000 to 80,000, $45,000 in a matter of 2 weeks? What was it? It wasn't really a big thing.
Bitcoin is climbing fast, but behind the hype, the real story might be a coming crash. A market strategist and financial analyst Henrik Zeberg believes that the current crypto market could experience a rapid and intense rally like the one seen in 2017 and 2021. He expects Bitcoin to surge in the short term, potentially reaching $140,000 to $150,000, driven by renewed investor enthusiasm and media attention. During this period, smaller cryptocurrencies and altcoins are likely to see significant rotations, with gains concentrated over a few weeks into early January or February. However, he warns that while this short-term excitement may appear promising, it will not fundamentally change the long-term outlook for the market. Zeberg highlights some emerging risks that could eventually challenge the crypto bull run. He points to developments like corporate strategies around AI and fiat reserves, as well as questions surrounding stablecoins such as Tether, which may create skepticism in the market. According to him, these events could later be cited as triggers for market downturns, but the true underlying factor will be broader economic pressures rather than individual incidents. He emphasizes the importance of differentiating between short-term hype, medium-term rotations, and long-term structural trends. Looking further ahead, Zeberg asserts that gold will remain the more reliable long-term investment compared to Bitcoin. While cryptocurrencies may experience dramatic swings and brief periods of extreme growth, their technical weakness and vulnerability to broader economic forces make them risky. In contrast, gold and commodity companies are positioned to perform strongly over the coming years, serving as a stable store of value and a solid hedge through the ongoing economic crisis. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Like we saw in 2017, and we had a fantastic rally into that top, and I think we're going to have that again here this time around. I think we're going to have let's see, did I stop sharing here? How we do? Um, that we see a fantastic top like in 2017, where it just went up for some time, and also in 21 you saw that it had a fantastic 3-4 weeks run, and then you're going to see a rotation into the small caps, or crypto. That means into altcoins, and you're going to see a top there as well into maybe late January, maybe early February. But that's as far as it takes. I think it's going to be faster and stronger than most people anticipate here, because we're starting to see the things that can kill this bull market here. We're starting to see the talks about the whole AI situation with Nvidia and so on, which you've seen the MicroStrategy also now starting to, interestingly enough, starting to build a US dollar reserve. Interesting when you don't like fiat and that you just have to build a fiat reserve anyway. Sounds interesting. And we have the whole situation with Tether, where we just saw that the S&P rating agency was giving them a week, which means that they cannot see through how is there really backing for the tethers that they are, in terms of US dollars, or is this just, a mirage? I think we are seeing some of the things that in the aftermath is going to be the things that people say, oh, this was the thing that actually, killed it all. It will not be, because the real thing is that it's the economy that rolls over and then you'll have it, but there will be some of the big losers there. But again, we have to differentiate between short-term, medium-term, and long-term. Short-term, which means the next few weeks here into early January, I think you can have a fantastic bull run. And I see Bitcoin going to 140, 150,000 even, but I don't see it much over that. And that would be enough. I mean, that would be quite strong from here. Again, that depends on what we mean about hope, because I think the market is going to prove everybody wrong right now, and I think you're going to see that the market will then accelerate, and I think strategy is going to make new highs, and people, especially if Bitcoin recovers 100,000, then you'll see people will be flocking into it and chasing it and talking about how what the genius of that Mike Sayer is, and then you're gonna see the final blow off top there. So in that time frame, yes, everybody, there is hope, but in the larger perspective, no, absolutely not. I mean, it speaks for itself when somebody who hates fiat as much and they are starting to build a fiat, a reserve. That's because reality is starting to dawn. Reality is that you cannot pay your, loan, your mortgage payment, whatever it is, with bitcoins. They try to tell you that it's going to be, but you can't. And when you're leveraged up, like what strategy is, at some point it's going to go, terribly wrong. And if Bitcoin is going to reach the levels to the downside that I expect, well, then there will be no more strategy. So I could see again, just imagine these crazy runs. We have the most insane bubble in the world. We have, everything is stretched. We have to think in those terms when we say how far and how high can it go. And I could see strategy going above 800 and above 1,000 in price in a 5, 6 times up in no time, because you will see that everybody will now be running into it when Bitcoin recovers 100,000, and Mike Sayer will again be looked upon as the savior of the world, and the same with Bitcoin. So, but that's going to be the final end of it, and the negative divergence on that is actually just quite extreme. So if you take a weekly chart on Bitcoin and you look at since March of 24, you'll see how the momentum of the tops of the move has been lower and lower and lower. And everybody talks about how strong it has been and so on. It's not strong. It's actually technically weak. And as I see it, I have to say, and I will say it here, I saw Burry coming out saying it's worthless. I will be a little more kind, and I'll say it'll be a collector's item in a few years. Definitely, gold is going to outperform Bitcoin. And again, we need to start short, middle, and long term. Long term, you're going to see gold by far outperforming Bitcoin, and by far being a very, very solid asset. And by the way, into the next, you can say, next many, many years, when we through the first part of this crisis, I think you'll see commodity companies in general will do fantastic.
Henrik Zeberg warns that Bitcoin is extremely vulnerable in the face of a real recession. Historical pullbacks in Bitcoin have ranged between 70 to 90%, and he expects a similar, if not more severe, correction in the event of economic turmoil. Even minor events have caused Bitcoin to drop tens of thousands of dollars in a matter of weeks, so the potential for steep declines during a credit crisis, a weakening dollar, or a collapsing stock market is significant. Zeberg stresses that Bitcoin cannot act as a savior for the financial system, as its volatility and susceptibility to broader market pressures make it an unreliable store of value or hedge during crises. He critiques the overly optimistic narratives promoted by crypto maximalists, emphasizing that past bubbles from the early 2000s dot-com era to recent crypto surges follow similar patterns of hype followed by sharp declines. At the same time, Zeberg sees a strong opportunity in gold, though he expects some initial volatility. While Bitcoin and other markets may experience dramatic short-term swings, gold is poised to enter a massive bull market over the longer term. He notes that the coming market decline could resemble a deflationary bust like 2008, with liquidity needs exposing vulnerabilities across hedge funds, private institutions, and even nations. In this environment, gold will emerge as a more reliable store of value, setting the stage for extraordinary gains once the initial correction passes, contrasting sharply with the fragile nature of cryptocurrencies. Let's get back to the interview.
If you look back in the 4 times you've had a larger pullback in Bitcoin, it was about 70 to 90%. This time around is a real recession setting in. A real recession is not going to be kind to Bitcoin. You will have that the stock market is going to decline. If my model is correct, that we're going to see a very massive top. You're going to have a massive decline in Nasdaq, and Nasdaq is outperformed by Bitcoin in terms of upside and downside. So I think you're going to see Bitcoin crashing quite a lot. And you see, there is actually, when we have days like the last few weeks here, all of a sudden, I mean, what brought Bitcoin down from 125,000 to 80,000, $45,000 in a matter of 2 weeks? What was it? It wasn't really a big thing. I mean, there wasn't a big thing going on. Now imagine if you have a credit crisis, if you have the dollar going to 110, the Dixie 110 or to 115, and you have, massive defaults, and you have, the stock market, cracking. Wow, who in their right mind would think that Bitcoin will survive that when it can drop by $45,000, 30%, 35% in a matter of no time due to nothing? I think people talking about all their diamond hands and so on. It'll prove and it'll come out that it's all paper hands when it comes to it. So, and I don't see Bitcoin as the savior of the financial system. There's no way you'll have something like that saving the financial system. The financial system needs saving, without a doubt. It needs a monetary reset. We need to get to a new, sound monetary future. But that's not going to be Bitcoin. I'm sorry to say, and I have to be a little more harsh on it now, because I think honestly, people out there need to understand the reality of things. I hear so many people sitting and thinking, "Oh, but Bitcoin is going to stand," and I'm just like, what? Look at the declines we have had without any reason. Why would you then think a severe crisis could bring Bitcoin to its high? And then they come with something with money printing, and you can just look to the charts and say, NASDAQ dropped in the financial crisis a lot, even though there was massive money printing. The NASDAQ dropped also in the 2001 crisis, even though there was massive money printing. Why would you think Bitcoin would do any better than that? And that's why, what I think. So people are unfortunately being led by all these Bitcoin maximalists and DeFi and whatever it is. And I think this is just the narrative of a bubble. That's the narrative. You and I are old enough to remember also the bubble of 2001 and the .com. And we had all this with the new economy and all this. And it's not about how much money you make anymore. It's about how much you spend on marketing and all these things. It's about how many clicks we see and all this. I mean, this is the very definition of, the narrative you need to see in a bubble, and that's what we have. I think, I've been wrong on how high gold could come. I no doubt about that. Could go. I didn't see that. I didn't see how much it would rise before. I would have all along been expecting gold to come into a massive bull market after this. What I think we're seeing here is the prelude to what is coming after. And when I mean after, that's because I look into the decline we're going to see here first, the crash. There are different kinds of crashes to the market. If you look to the 2022 crash or the decline that you had there in the stock markets, it was really driven by an inflationary situation where stocks was declining because inflation was rising. That's not a good thing for the consumer, and hence it was not a good thing for the stock market. What we can see now is that the decline we could see here in the next one that comes will probably be a deflationary bust, which means it'll be similar to what we saw in 2008. In deflationary bust, there will be organizations, countries, private organizations, hedge funds, and so on, that will be needing liquidity. If I get it right, you go see the floor is going to open up. You'll see a lot of value dropping into that, and liquidity will be needed. That is also why Bitcoin will drop. The Fed will not step in and close those gaps immediately. First of all, they can't get out to it, and especially if we have what I can see as a private credit crisis developing, and you'll see the more opaque structure of that potential setup there, you'll have a lot of holes opening up everywhere. Liquidity will be needed. Liquidity meaning US dollars, and it doesn't mean gold, it doesn't mean Bitcoin. In that setup, I don't think gold will do well, and I still think you're going to see a massive decline first. But the rally that we have seen is telling us that it's setting up for something quite extraordinary.
Bitcoin exhibits extreme short-term volatility, with rapid price surges followed by sharp declines often amplified by market hype and economic shocks, making it highly vulnerable during recessions or credit crises. In contrast, gold and commodity assets provide a more stable store of value, able to withstand financial turbulence and deliver consistent long-term returns. While Bitcoin may generate temporary gains during speculative rallies, historical patterns and underlying economic realities suggest that traditional, tangible assets remain the more reliable foundation for preserving wealth during periods of market instability. How can investors balance the high-risk, short-term opportunities in Bitcoin with the long-term stability offered by gold and other tangible assets? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.